Welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, is one of the best ways for you to exit highly appreciated luxury homes, businesses, real estate, cryptocurrency, so you can create and preserve more wealth, or help your clients, friends, and family do the same. I'm your host, Brett Swartz. In each episode, I'm joined by some of the best real estate, financial, business and leadership minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He's out of the great state of California. In fact, he's an expert in real estate industry. He's been named one of the top 100 of America's top performing real estate agents by the Wall Street Journal, and was awarded the best marketing campaign for a property in 2013 by Leaders in Luxury. He's been licensed and practicing real estate in the South Bay of the greater Los Angeles community since 1987. And he and his dynamic team have been featured on ESPN, Fox, NBC, ABC, Bravo, HGTV, and the Fine Living. Please welcome to the show with me, Ed Kaminsky. Ed, how you doing?
I'm good. Thanks for having me here. I appreciate it.
Absolutely. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, absolutely. So I started real estate 34 years ago and have been building that business for a long time. Moved into the luxury space probably 20 years ago. I built a couple companies along the way. One that relocates athletes called Sports Star Relocation, and working with their situations all across the country. I built a luxury auction company that specializes in unique assets and a unique way to bring them to the market, a company which I've since sold. And then I built my core business. We sell about $300 million a year in property, over $2 billion in sales so far. And I just was promoted to head up the growth and launch of EXP Luxury across the globe to 22 different countries. And, you know, we're out there every day just trying to help others hone that space. So, yeah,
that's I love it, Ed. You're a Hall of Famer, and thank you for your service for EXP and taking it to the next level with luxury. And it's an amazing company. I'm proud to be a part of it as well. By the way, we're going to be talking about what to do when your home price quadruples in value and a possibly downward shifting market. That's the topic of today. But before we get into that, Ed, I want to take one other step back. You know, Ed, I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. So I don't want you to go back to your younger days, your high school days, right? And I'm curious, what are those one or two gifts that you believe you were given, and how does that help how you help and bless people today?
You know, it's a couple of things. People ask me that question differently, but, you know, I think about my path, right? And, you know, like so many others, we all came from absolutely nothing or less than nothing, right? And no need to go through those stories, but I was committed to doing better for others, for my family, than I had at a young age, right? I wanted to figure out how to do that and how to create success for myself and then give that back. So I self-educated, right? So I have the gift of believing that I just don't know anything or don't know enough. And I go out there every single day seeking out information, how to improve what I do every day. And now, as I've learned so much, I'm now committed to figuring out how to deliver that back to others, right? And I call it creating millionaires. And how can we create more, whether it's through teaching them how to create a successful life, a successful business, how to successfully invest in their real estate assets, or how to protect their real estate assets and protect their millions. So that's what I'm committed to, is just, you know, teaching people, because I just grew up trying to learn, and I know I have that knowledge and skill sets now. So delivering it to as many people as possible is my passion today.
Love it. Committed to doing better for your family, believing that you didn't know it all and you wanted to learn, be curious every day. And then also believing that once you do know how to do it, you want to give back and help others. Is that a fair summary?
That's it. Yeah.
Excellent. So let's dive right into the topic at hand. What is the number one secret, Ed, to do when your home price, or your, home property values or quadruples in value in a possibly downward shifting market?
I think you always have to look at long-term planning. That's the first thing. It's not what you have to do right now to protect yourself in this downturn that might happen. Like, oh my God, I better sell immediately. But where do you want to be 5 years from now, 10 years from now, 20 years from now? Understand what that is. Understand the consequences of selling it and the consequences of keeping it, and then make those determinations. If you're going to be, delivered an onslaught of millions of dollars instantly, what are your tax consequences? And are you prepared to deal with those? If you held the asset, what are your carrying costs? And are you comfortable with dealing with the maintenance and the carrying costs that it has? So you've got to answer those questions. It's different for everybody, but I think it's just digging down into those answers.
So number one is long-term planning, understanding the big picture of the asset, the long-term consequences of holding on to it, the long-term consequences, short-term consequences of selling with tax consequences. I think that's a good point. You make up carrying costs, right? Because some of these larger properties with rising costs and rising inflation and rising labor costs, it can be really expensive, right? So you want to make sure that you're building a solid long-term plan. Is that a fair summary, Ed?
Yeah, absolutely. I think we forget about some of the ongoing maintenance that happens. Like, you're going to have to replace the roof every 15 years, and plumbing and electrical and things like that. So those are costs. You have property tax. You have a lot of different ongoing. The bigger the estate, the more expense, right? You have landscape costs, water costs, etc. That can be cumbersome depending on how big the asset is.
Excellent. So what's the number two secret to do when your home value quadruples in a possibly downward shifting market?
I would say listen and then analyze your own perspective of what a downward shifting market really means, right? What are the real projections? What are causing it? What causes a recession? What causes inflation? And better understand that, because if you panic sell in a downward shifting market and dump the property, are you leaving money on the table that 18 months from now, that temporary dip goes away because we didn't really hit this downward spiral that we've experienced in 2008, where property prices crashed from 30 to 70% across the country? Are we in that market, or are we just in a little dip that's temporary because we have other factors that are influencing what's going to go on? So understand what the economists are saying, understand what the reporters are saying, and shift or sift through the noise, because there is a lot of noise out there, and some of it's accurate, some of it's inaccurate, and a lot of it's projections that no one really knows for sure.
Got it. So what is the macro overview, understanding the nuances there, perhaps not making an emotional quick decision based upon information that's still coming at us pretty quickly, and shift through the noise? Is that a fair summary, Ed? And also, I'm curious, what do you think is the main difference between this downturn, how it compares perhaps to the previous, downturns that you've seen during your real estate career?
So I saw two. I saw the one in 1990, and that was more localized for me to witness what was going on. But that was, I don't know if they called it the Cold War, but the aerospace just fell off the earth as far as, and that was the main source of work and labor in our communities. And so the mass exodus from that industry caused a crash locally here. Nationally, though, the one that was the most obvious to most people was 2008, 2009. Interesting time. So that was the mortgage breakdown. And if you look at every recession that's hit, which is, we're projecting a recession. If you look back to the 1950s, I believe, real estate didn't crash during the recession. The only time that happened was 2008. And it wasn't because the recession caused the crash, but it was real estate that caused the recession. So it's a different situation going on. We also have people that have equity now. In 2008, no one had equity. Everyone was upside down. It was a pleasure to give your home back to the bank, right? If you owed $1 million and it was worth 800,000, the bank said, if you give it back to us, we'll forgive the 200 grand you're upside down. If you sell the house and didn't involve the bank, you're writing a check for 200 grand. So it was a $200,000 gift from the bank to let it go back to them and let it foreclose. And the bank wanted to get it off their books, sell it immediately. They sold it for 700,000 to get it off their books. So there was no one protecting equity. Today, people are protecting equity because it's their personal equity. If you owe $1 million, it's probably worth $1.2 million or $1.3 million. They're going to protect that. So that's one factor. We have a shortage of housing nationally right now. We do not have enough housing starts to support the housing demand. And the reason housing demand is there is this movement of the millennial population that is still one of our largest population groups. And they're moving out of their house, and it's creating the need for another household, but it's not there. Housing starts dropped when 2008 to 2010 hit, and the developers have not reproduced the necessary housing units. So supply and demand moves prices. We don't have the supply to support the current demand.
Very well said. And I think that makes a lot of sense. Now we're also seeing, interest rates that are making it higher cost and less affordable for people.
Yeah.
And it seems like there's a shift, definitely a shift going on. It's happening now. Where do you think this thing starts to equilibrium out? Because you're right, you have these headwinds of interest rates, right? But you have still the tailwinds, if you will, of just lack of supply and demand. So I feel like it's in a Rubik's Cube, Ed, and I'm trying to move this thing around to make sense of it. But every time I move it one way, another thing pops up where it's a challenge. So what's your take on 2023, especially for the luxury high-end market?
So you're 100% right. The interest rates are pulling the other direction. It's pulling against supply and demand, right? We don't have the supply to support the demand, but interest rates are crushing the emotional and financial ability of buyers to make a buying decision. So it is pausing sellers that want to move from their current home up because they don't want to pay the higher rate. It's causing certain buyers to drop down in their shopping price point because of affordability. And certainly on the high end, there's just that. I think it's more emotional, right? Because not as much financial, but they're like, okay, what if prices drop? Why won't I buy when prices are lower and wait? And so that causes pause for the high-end property buyers and high-end sellers, really, because they don't want to flip into a new property with a 7% interest rate when they're paying 2.5% right now. So that does cause, conflict between what's going on and likely downward pressure on pricing. But what really moves the needle is inflation and recessions, right? So we have inflation going on right now. That's why interest rates are going up. And while inflation is here, they're going to push interest rates up. It's clear the next quarter, maybe the quarter after, they're going to still crush us and raise those interest rates. It's going to force us into a recession. As soon as that recession hits, that's going to be pressure to lower the interest rates. The second rates start going down, it's going to bring a buying fever back to the marketplace. So my projection is by Q3, Q4, when interest rates start getting pushed back down, it's going to wake up the buyer pool again. And I think Q1 of 2024, we could be back to some of this old frenzy we saw that was happening in the last 18 months. I can't say for sure. This is just with my study of the economics out there, but I'm no economist.
I appreciate it. I appreciate you giving some dates there and some potential projections. And I think you sounds spot on to me. We don't know for sure, but it makes a lot of sense. So I want to shift a little bit into the largest wealth transfer in the history of the planet, right? You've sold over $2 billion with your team. You did $292 million in 2021 alone. And by the way, this is the South Bay, Hermosa Beach, Manhattan Beach, Palos Verdes, and other areas as well. But that's the main area for the team there. And we're seeing baby boomers, right? The largest wealth transfer in the history of the planet. It's, some estimates, Ed, say as high as $32 trillion is going to pass from the baby boomers to millennials in the next 20 years. And no time in history do we know of more wealth that's ever transferred in one generation. And number two stat that's really interesting is 50% of that wealth, Ed, is tied to high-end primary homes, of which, the South Bay or Silicon Valley, parts of San Diego, of course, parts of New York, some of the highest concentrated, highest appreciated assets in the history of the US. Okay. And then the other part of that is commercial real estate and private equity, which is businesses. But these are all illiquid assets that people are wanting to sell. Sometimes I hear from clients, they feel real estate rich and cash flow poor, right? Or they feel like all of their eggs are in just one property, right? But they feel trapped by this capital gains tax, which in California, it's about 13.3. Federal is about 20. If it's investment property, you can add some Obamacare to that, 3.8. So my question for you is, what's the biggest frustration, Ed, when it comes to sellers who want to sell prices that sell houses that have quadrupled in value, but they have this huge capital gains tax? So what do you find your clients saying?
What they're saying is they don't like their Uncle Sam, because he wants to take all the money when they sell. And people have a real problem with that, because as much as they should be happy that they gain 3, 4, 5, $10 million in equity and should be happy to pay the tax bill, no one wants to do it. No one wants to write that check. It just doesn't feel right. People have counted that value as their personal equity. When you look at their net worth, they're counting it, right? I have a $12 million net worth and I got $8 million in real estate net worth, until they calculate what happens when it sells, and they got to write that check to Uncle Sam. And so dealing with that frustration that they're going through is a conversation we have all the time.
Yeah. So talking through that, right? So I started out at Marcus and Millichap, and we learned about the 1031 exchange, and as you know, it doesn't qualify, never has for a primary, at least in my history of the 1031 for years. And so people are on these primary houses, and either they gotta rent it out for a year or two, and then they have to 1031 into something else, and then they have to become a landlord just to defer the tax. Now we learned about something called a deferred sales trust, and we think it'll change the industry forever, and it already is and is doing that. Just most people don't know about it, where you can sell a high-end primary home, defer the tax, and then invest it into cash flowing producing assets, stocks, bonds, mutual funds, or real estate. You can't use the money to buy a primary. That's still taxable. You can use a portion of it to do that. But I'm curious, in your experience, what have been the strategies that you've helped your clients? Maybe, you're not going to give tax or legal advice, but what are some of the things that you've worked through with them that have actually been kind of a home run for them when it comes to exiting capital gains tax way that's smart?
Well, let's say a couple things, right? One, honestly, we end up focusing on what is it that they really want, right? It's more of a personal conversation. Like, what really is important to you? Is the tax the real problem? Or what is it you're trying to gain? And people are usually trying to get rid of some pain and go towards some pleasure of some sort. I dig down and try to figure out what those two things are. Like the burden of maintaining the home and the pleasure of living near their grandchildren, right? That might be an example. Is that more important than the tax they pay? So for me, not using the deferred sales tax structure very often with clients yet, until I learn more from someone like you about it, I'm just trying to get them through the willingness to write the check to get the benefits they want. Other than that, I've had, and the laws have changed, but I did have clients that took advantage of the 1031 exchange and would rent their house out for a year and a half, then 1031 it into something else, have that income producing asset, and then move into it over time, and then get $500,000 tax free because they're married. They used to be able to do that every 2 years, but the IRS changed that law. You can only do that every 5 years when you're moving from house to house to house. And that's a long process and a pain in the butt, to be honest with you. Other than that, it is just discovering alternative tax protection methods. And, back to what I said in the beginning, it's going out there, researching, educating yourself, talking to your CPA, talking to your wealth advisor, and finding experts that have those tools to figure out how to do that, and if it fits within your risk profile.
Yeah, thanks, Ed. Yeah, we call it the shotgun wedding, right? The 45 days to identify, 180 days to close, or even call it like the when you got to like move out and do that, it can just be the blockbuster way of exit planning, right? It's just not very efficient. It's just typically not, it's typically either moving you into more pain or more potential pain, right? Because you time it wrong. Whereas with the deferred sales trust, what's really cool about it, if anyone wants to learn about it, go to capitalgainstaxsolutions.com. We call it the Netflix way of exit planning, because not only can you sell, defer the tax immediately, but then you can dollar cost average into different investments. You could put it back into a business venture. It also works for cryptocurrency or business sales or investment real estate. It can save a failed 1031. And each of these asset types can go into one another. And there's none of the timing restrictions. You have no 45, 180. It's really incredible. And people want to learn about it. You can go to capitalgainstaxsolutions.com. That being said, Ed, we're running out of time. Are you ready for the lightning round?
Yeah, bring it.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget you'd make sure to tell yourself to do?
Oh, I'd buy a house every year. I'd buy real estate every single year. And to do that, make my primary residence a little bit below my means, right? Because I think the more cash you could put into investment assets, you can build your net worth faster than being in a larger home.
100%. Robert Kiyosaki says it well, like your primary home is not an investment, it's a liability, right? An investment is something that's producing cash flow. Not that your primary home can't grow in appreciation, you can't house hack it. It's just the general idea is make your investments, your primary home, your primary home. I couldn't agree with you more, Ed. Delaying that gratification and investing early and often is so important. Question number 2, what's the number one book you've recommended or gifted the most in the past year?
Well, I'm in the sales business, so it is Sales Simplified, sitting on my desk. And it really just talks about how to identify what's important to the client as opposed to what's so great about yourself.
Sales Simplified. Who's it by the way?
It is by Mike Weinberg.
All right. There it is. Yeah.
New Sales Simplified.
Perfect. Excellent. Question number 3. I have to check it out for sure. Question number 3. What are you most curious about right now?
I am curious about the growth of my company. I am doing things to scale the company, and I've been working on it for 18 months, and I'm waiting for that hockey stick curve to show up, and I want to know if it's next week or next month or next year.
I love it. You're still hungry after all these years, Ed. What's your number one secret to staying hungry after all these years?
Surrounding myself with a lot of people that do way more than I do. So I have constantly, I'm just looking at my ability to improve, because I know if others are doing great things way faster or more efficient than I am, I also have that ability. So just trying to figure out and discover what those are. And that's what I live for every day.
I think that's great. Next question, second to last one. Number one leadership quote or theme that you strive to live by?
Leadership quote is, don't be attached to the outcome. You have to make decisions every day and be willing to be bold and not worry about what could happen, but just, they say failing forward, right? It might work, it might not work, but just stay detached emotionally. So if things go great, fine. If they don't go well, you just adjust and move on.
Great advice. You talked a little bit about pain versus pleasure. I love that analogy. I want to shift that a little bit. In fact, Glenn Sanford at the EXP conference in Vegas a few weeks ago, where we both attended, he was talking about pain versus purpose, right? And so, I believe we've all had tipping points in our lives, right, where we're moving from pain to purpose, and that pain typically is a motivator that's short term, doesn't last very long, right? Especially once you get through that pain, then we tend to coast as human beings, which leads us into more pain unless we have a higher purpose. So I'm curious, what was that tipping point, that time in your life, that season of your life where you felt like you really clarified your purpose and it helped you to, become one of the best in the world at what you do?
It was when, Mike Ferry, a real estate coach, said one time on stage, he said, when you don't go do your job as a real estate person and you don't get the business, right? You don't pick up the phone and call your past clients, or you don't pick up the phone to dial for new business. these clients are getting served by somebody else. Do you feel they're getting the same service that you would have provided them? And it was a big wake-up call, because I actually I believe that I deliver the best service available in our marketplace for our clients. And I'm doing a disservice to them by not letting them know I'm here. And so my purpose has been to deliver beyond great service and to let as many people know that I am able to do that for them. Otherwise, they're going to get inferior service. And that drove me through most of my career until recently, which we talked about before, which is my new purpose, is delivering what I've learned to as many people as possible, creating millionaires wherever I can. And so that was another pivotal point, in the recent past.
Absolutely love it. It's a great way to end the conversation. Ed, I want to thank you for being on the show. I want to thank you for sharing your expertise, your thoughts on the market, your thoughtful thoughts on the market. I want to thank you for being committed to do better for your family and believing that you can always learn something new, but also believing that you can give back and help people change their lives. I love your mission about making millionaires, and I love that you're helping to head up EXP Luxury across the country. It's an amazing thing. Congratulations. For our listeners who want to get in touch with you, Ed, would you remind them one last time what's the best place for them to find you?
Well, you can find me online at anywhere socially with my name, Ed Kaminsky. You can reach me directly on the cell at 310-427-2414. And I want to say, Brett, you pay attention, right? I just want to say I appreciate that. To hear you listen to what I'm saying is an amazing gift and talent. So good job.
Thank you. I'd appreciate that. And also want to thank our listeners for listening to the episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options, and not having a clear plan is the enemy. And using a proven tax deferral strategy, such as the deferred sales trust, to us is hands down, if not the best, one of the best ways to exit highly appreciated primary homes, businesses, investment, real estate, cryptocurrency, so you can unlock freedoms, time freedom, location freedom, entrepreneurial freedom, financial freedom, in a way that's transformational for your life and what you're trying to achieve. If you want to learn more about this, you can go to capitalgainstaxsolutions.com. You can also check out the new book that's coming out. It's called Building a Tax Deferred Exit Strategy. And sort of my story about how everything happened and how it was a game changer for me with the deferred sales trust. As well, we have people like Kevin Harrington from Shark Tank in the book and some other really smart people. You can also check us out on Expert CRE Secrets podcast and the YouTube channel there. Please rate, review, subscribe. Please share this with someone who could help. And especially if you're selling any luxury real estate, really anywhere, you got to connect with Ed, because Ed's either going to know the person or he's going to be the team that do it, especially in the South Bay, Hermosa Beach, Manhattan Beach, Palos Verdes. Make sure you get with Ed at itssold.com. It's itssold.com. Thanks so much for listening, everybody. And we will talk to